Good morning. I'll be with you shortly. Good morning. It's Friday, the 6th of June. It is non-farm payroll. And it was one hell of a trading session yesterday. I had a FTSE position. As you can see, I wasn't stopped out of the last one, but I was stopped out of the others, and I have yet to. And I traded with this account as well. That I need to withdraw some money from this account to reflect the true balance. And I've just I've added back the trades that I was stopped out on because I still think that the FTSE is headed higher. And I'm sorry about the delay this morning. Well, let's see what we can make of this with non-farm payroll lurking, and then I'll adjust the account accordingly. But can't hide the fact that I'm in this trade. So I imagine that we will see a test of yesterday's high at 40, and then, well, hopefully higher. This is what I obviously wanted yesterday, but it didn't happen. The DAX is sat inside the overnight range, while the as you can see, the FTSE is well above the overnight range. I'm not sure how long this session is going to be, because I'm kind of waiting for the non-farm payroll numbers. But let's just see where this will take us. So right now in the FTSE, you have a very strong bull bar 1, 2 and 3, unfortunately, not really indicative that we will see continuation yet. And with the DAX trading inside the trading range, that's more typical pre-non-farm payroll behavior. So we got quite a bearish bar 3. I'm just looking through some data that I prepared, so just bear with me. So if you're looking through, so here's the non-farm payrolls dates for the last 2.5 years. So if I show you what tends to be normal behavior, say in the FTSE on these days, so we can start off with January 6th, so that's this one here. So it's a trend day, and then February 3rd, FTSE trend day, 10th of March, trading range day, it seems, 7th of April. Market is closed in the UK for that. It's I think it's Good Friday, tend to be. 5th of May. Trend day, but with a deep retracement. So a trend day base means you open in one end and you close in the other. June, trend day in the FTSE. Let's do July, which was the 7th July. This one breaks the pattern because you have a very strong. No, hang on. Did I get the wrong? 7th of July. Sorry, I looked at the wrong one. Oh, 7th of July, real trading range day. For August. Oh, wrong way. Here's the 4th of August. Trend morning and then a big break and then down. So that sort of breaks with the pattern as well. And then the release of the number and then a big swing up. So it still closes at its highs, but big retracement during the day. 1st of September. So we're still just in 2023. 1st of September, we have a trend day, but settling into a sideways trading range after the first hour. 6th of October. A much more messier trading day. So what the FTSE is looking like now is it just has the hallmarks of being a trend day higher. November 3rd. Much more trickier day. Seemed like a strong trend move higher and then a big reversal. And then we'll have December. And that concludes 2023. Big trend day morning up, but then a big reversal. And then another push higher to close strong on the day. DAX, on the other hand, is completely settling in. So that takes us into 2024. Where the first non-farm payroll is on the 5th of January. And that's a trend morning down for the first 2 hours, and then a reversal. So that's a break from the pattern as well. 2nd of Feb, 2024. Ooh, a very sideways mess, but definitely a bearish day. 8th of March. A trend day, but to the downside, with a trading range for the first hour and a half. So right now the FTSE is making new highs. DAX is doing nothing. Where was I? March 8th here. So the next one is 5th of April. 5th of April here. It's a sideways mesh after a gap down. I have a target, but I am noticing obviously this area here. So I'm going to close some of the more exposed positions. Closed two of them. DAX is actually breaking lower, which is an odd experience when one index goes up and the other index goes down. If we then go into May 2024, May 2024, we have a trend day higher, up and down though, very tight channel, and then a positive non-farm payroll. And right now the DAX is breaking lower. And then we're coming into June. I'm doing this as much for myself. A trend day lower in the FTSE. So we are completed the first 30 minutes of trading in the DAX. We are inside the trading range, overnight trading range, but bar 3 hasn't broken bar 2 yet. That's here. I am always wary of taking positions on non-farm payroll days. But it seems as if I read the FTSE correctly. I'm just really frustrated that I experienced what I did last night. Meant that I was stopped out on many other positions and it was a really volatile evening. And I tried to re-establish my positions. And obviously I need to reflect on my account balance up here what I lost whilst publicly streaming my account. As you can see, that my account balance is actually quite healthy compared to what it should be after yesterday's trading. But that was because I traded this account as well later in the evening, and it was as you can see, it was immensely volatile. It was down, clear out all the stops down here, back up again, retest, back up again. So a very challenging environment. Just moving stop losses to break even. There's no point in having them floundering down here. So where was I? I was in June 2024, 7th of June, so a trend day down. So there is a tendency for trend days, it would seem, in the FTSE. And I would do the same in the DAX. I just haven't had the opportunity to do so today. I ran out of time. Here's the 5th of July 2024. A gap up in the FTSE, and then a reversal, and then a trend day all day. 2nd August. Sideways mess. Real sideways mess. Sixth of September. Strange price action. See, these horizontal lines, they represent 20 points of price action. That's a very constrained time, price action confinement. Then we're coming up to the 4th of October. Now, I'm not saying that this is your path, but this really helps me as an individual to see how the past behavior has been surrounding a non-farm payroll. Move up for the first hour, and then big trend move lower, and then reversal sell. And we've seen this pattern as well. Then coming into the 1st of November, big trend day up. And then the 6th of December, sideways trading range. And then that takes us into this year, Jan, Feb, March. They'll go like this. January 10th. Initial rally for the first 40 minutes, and then a big trend day lower. So on something like this, I would probably use first bar. If this was a positive, say, okay, well, I need to be short below the opening low. Unless, of course, you're going to go with, well, I got two negative bars closing at its low, so I need to be short this index, excuse me. And then we're coming into 7th of February. Somewhat same pattern as the month before. reversal came earlier. It was gap down, filled the gap, and then a trend day lower into the actual release of the number, which didn't seem to impact it very much. And then close. And then coming into just 3 left, 7th of March. Wow, long night. A very uninspiring trading session ahead of the non-farm payroll on the FTSE in March this year. And then April, April 4th, very pronounced trend day right out of the gates. And then finally, last month in May, 2nd of May, a gap open and then a long sideways slug and then a strong close. Okay, now I could do the same with the DAX as well, and I normally would under a normal prep circumstances, but that's not what I've had. So let's look at the DAX now. We are trading within the confinements of the overnight range. We are in a non-farm payroll environment, and we are trading below the low of the second bar, which is the school run bar. What I as a trader now have to decide is, right, do I want to do the traditional school run, which means that I'm selling short below 2, which is short below 24,228, or do I take in the hypothesis that when a school run triggers inside the overnight range, you deploy the ante instead, meaning that you don't sell short below 2, you actually buy below 2. Now, consider that 3 went to the low end of the range, and considering how much focus there is on non-farm payroll being released in a handful of hours, I would perhaps rather sit this one out. What I can do is swap instrument and go to the DAX and turn into the 15-minute chart and just look at a couple of the most recent non-farm payroll days in the DAX. So we can just take this year. So here we go. So the first one we can look at is, since we are in December last year, let's look at that. So December last year was the 6th of December. There you have a fairly neutral open. You have a second body bull close and a very distinct break above, and then you would settle into a sideways range. Now, unfortunately, I can't tell you what the overnight range was. What I could do is perhaps do it on this chart here. So here's the 6th of December last year. When the school run breaks, it does so still inside well, actually that can be a bit debatable because the inside range is the midnight range, so it actually does it above the overnight range. So there the hypothesis just holds true, you just being a traditional buyer. The next one is the 10th of Jan. The 10th of Jan is most certainly not a good school run long there. The market triggers a long and then also triggers a short, then to reverse again. How would that look if we look at the data from the actual 10th of January? Well, let's find out. So here is the right here, the market is sat inside the overnight range. It breaks out here. You could argue that it actually breaks out above the overnight range and then trades back into it. So along here at 42, the best that it would went was about 9 points above. The question is, would you have taken it when it is where it is? That's probably up to debate. The stop is not unreasonable. It's about 30 points. That's a relatively small school run. But then down here, it most certainly takes place inside of the overnight range, which means technically that you should be a buyer down here. You know, using the anti-hypothesis. If we then look at February, which takes place up here. There. So the next one was on the February the 7th. There you have a DAX second bar, which is a doji sat right in the middle. You get a break. You're actually opening above yesterday's high, but how does it look on the actual or with the overnight range factored in? Well, let's have a look. You have a long protracted range during the night. Then you get a break from the range during the morning trading. Then you have bar one. Obviously I can't put bars on this far back, but this would be bar one here. Then you got bar two here. Then you get a break at 9:14. The market goes as low as 8.94, and then it trades back into the range. So 8 and 8.15 bar are overlapping each other. Difficult, to say the least. The next one is the 7th of March. Let's just stick to this chart here. Here we go. 7th of March, the market opens well above the overnight range, triggers a long right here above the overnight range, and then reverses. And the reversal takes place, I would say, outside the overnight range, roughly, which means that should technically have triggered the ante, which would have been a really bad idea. I'll show you on the overnight of so it'll be this one here. Hang on, that doesn't make any sense. I thought it was a gap. Did I take the wrong? I think I took the wrong. Sorry, I took the wrong day. Let's delete what I just said and let's start afresh. Here's the overnight range on the 7th. Market opens here at 8:15. At 8:15, it triggers a short below, and that short comes beneath the overnight range. So that is a short here, a fair and square short. And then the market goes down. You're happy for a bar or two. Then you're not so happy. Goes back into the range. Very close to actually going to the opposite end. It actually superseded 162 versus 167. No, it doesn't. And then only then after a good hour and 15 minutes of torment, if you hadn't already been stopped out because you were short from 87 and it went as low as 06. Do you see that? It triggers a short at 23,087. It goes as low as 23,006. So you sure as shit would have moved your stop loss down to break even by then, and then you would have been stopped out on this without a doubt. I mean, that I have no doubt about that. So let's go to the 4th of April. Which comes here. 4th of April seems to be a very strong bear trend day. Takes place below the previous day's range. And then it's just a goodbye. Trend day galore. Now what does that look like on our chart with the overnight range? Let's have a look. Go to the 4th of April. Here it is. So that is in no conflict with our hypothesis. The break of the school run takes place below the overnight range, and it just triggers an avalanche of a humongous move of 1,000 points. See that? And then last month's which was on the 2nd of May, and that's right here. Market opens inside the overnight range, triggers a long here at the top end of the range. That would traditionally be an anti-signal. So you're shorting it here. That would not have reflected well on you. You would have been in a heat of problems. So there the anti most certainly didn't work. So fair to say a real bag of hit and miss for school run. And as we're looking at the school run performance right now, well, if you had shorted traditionally at 228, you would be losing. If you'd bought the ante below 228, yeah, you'd be marginally in profit. But obviously you would be concerned. So I will sit out the school run in the DAX this morning and just wait. And that's what I will do. I will just sit and wait now until the non-farm payroll numbers are being released. Wow, I am really beside myself this morning. It was a long night. Yeah, no, my party days are over. It was a work long night. So since I haven't got any trades for you, I don't see why. There's not much point here. You should still be in one of these that wasn't triggered on the stop loss. At least I don't think it was. But I traded so much last night that. But I'm gonna have to go through and. I'll be streaming the non-farm payroll. I'd really like to do that, so I will look forward to seeing you there. So perhaps we should just leave this for now, and we'll see you later. So sorry for the late start. I will clean up this mess with the FTSE and withdraw and do a complete breakdown of what happened yesterday, because I owe you that, and I'm going to do that now. So I'll see you for the non-farm payroll, and yes, I look forward to it. Thanks a lot for this morning.